Welcome, G3 investors. This is Greg Gallagher, and we're looking at the first week in April. The week ended April 6th. Um, and what we're going to do, this is part two of the reporting for this week. We're going to look at some of our trading tools. Here's an introduction to the website where you can see what we do, www.g3investors.com, where you can learn about it, ETFs, swing trading, and everything. Now, what we're going to do today is we're going to pull out some toolbox stuff. And what I do, I call this the scanning of the market. There's about somewhere between 35 to 40, sometimes even 50 ETFs that I'll look at. And that just gives me an idea of what's happening in the market. And I categorize them. So right now we're looking at ETFs that are trading at or above their 50-day moving average. The one and only trading position we have as of April the 6th was GLD. That's the Spider Gold Trust. And you can see this one has been, well, first of all, the blue line is the 50-day. The red is the 200-day. And this ETF's been living at around its 50-day, and it's just been trading back and forth across of it ever since about March, or the end of February, 1st of March. So we've got a position in it. We got our stop loss set at right below this bar right here, and around 124.80 or something like that. So that's one. Now the only other ETFs that, according to my scans, where we're at, IJT. Okay, that's the small cap 600. Again, we've got another one. We've got a sideways trend here. It's right at its 50-day, and we're out of the position here. And we really wouldn't be interested until it got above this 178.50 here to signal that it's resuming this. If you look at it, you got a little bit of a trend there. Then you've got ITA. It's hanging out around its 50-day. This is aerospace and defense, or as I like to call it, Boeing, because that's the big player in here. But again, the 50-day is much higher than the 200-day, so it's as far as the shape of the ETF, it's much better than anything else. Not much happens bad when you're above the 50-day, but right now we've been testing it, and right now we don't have an open position, and we probably wouldn't get in until it went back up to 203. Okay, so amazingly enough, that's the only good out of the 35 ETFs. That's the only one that's really in decent shape. So let's look at the next set of ETFs. These are the ones that are trading between, they're lower than their 50-day, but they're higher than their 200-day. Okay, so SMH, here we go. So you can see this one, the 50-day is up here, the 200-day is here, and it's tested the 50-day, and right now it's living below the 50, but it's never touched this 200-day moving average. So I consider the ETFs that are in this bracket, and there are 10 of them, okay, they're weaker, okay, and in a market that may be reversing direction, this is the sort of weakness you start to see. There's the XLK, that's the technology sector. You can see it doesn't touch, and then XLY. So you can see how fast this can go. XRT. Now this one's, you can see it's a little bit weak. I still classify it as it's below the 50, it's above the 200, but it's getting real close to move to the next category, which I call testing the 200-day moving average. But the reason I'm saying that is look at this blue line as it goes down. But so far, it hasn't really even touched. It came real close here, but it hasn't touched the 200-day yet. But when this blue line crosses this red line, that's considered a very bearish thing in trading parlance. It's considered a black cross, and it's not very good. It indicates that we're probably going to be living below the 200-day moving average. We'll get to see some of those here in just a minute. Okay, Greg, move on. Let's see. We're at XRT. Let's try KRE. It's just regional banks. Again, nothing I would be interested in until it gets above the 50-day, above the 62.50 here, because it's just trading sideways in a bearish flag. I think we talked about that one in the last report we did. And here's the QQQ, the NASDAQ 100 or the NDX 100. Again, haven't hit the 200-day yet, but still living below its 50-day moving average. Not good. MOO. Is that Mo or Moo? I guess it's Mo. Ooh, came real close to the 200-day right here, but never touched it. But again, looks like it's headed that way. IJK, I think that's the 400, the mid-cap 400 growth stocks. Good ETF, but living below the 50-day in between. It's a tweener. IWF. That is the Russell 1000 growth stocks. Again, living right in between there. EEM, that's emerging markets. Again, living between. Looks like we're getting this downward moving. So that's the 10 ETFs that are trading below their 50-day, but they're above the 200-day. I mean, it's not a pretty picture, but it's not totally ugly yet. I don't consider it bearish until something tests the 200-day and then lives below it. So let's take a look at the 10 ETFs that we follow that are testing the 200-day moving average. Now see, the difference here is we're closer. Again, we've got this blue line descending towards the red line, but we've actually touched the 200-day. Even though we didn't close below it, technically I could have put that one in the other one, but once it touches the 200-day, it gets my attention real quick. So let's look at this one. This is the industrial sector. Okay, so we've crossed over, still haven't closed below it, but we've touched it 3 times. So this is more of a test. Here's metals and mining, XME. Again, we've tested it. Looked like we were going to take off and do something, and then came right back on Friday. And here we are, starting to get ugly again. The SPY, S&P 500. As I said in yesterday's report, it's not as strong as the NASDAQ. Why? Because 1, 2, 3, 4, 5 times now and we actually closed below on this day. We closed at 257.47, and it was 259-ish was the 200-day. So we actually closed below one day, but we're not below right now. But this does not look good, folks. I mean, something's got to happen here, or we're going to be getting into bearish territory on the S&P 500. Here's the Dow. It's not as bad as the SPY. Okay, the DIA did touch back here on the 2nd of April. IWM. This is the Russell. This is getting really close here. We're coming down and we're squeezing down closer. The 50-day is not too far from the 200-day, and we have crossed once below. So again, the Russell is not, and if I drew this line down here, we have a pretty steep correction going on the Russell 2000. IYT. I don't even know what some of these are. IYT. Okay, what is that? Transportation. Jeez, I should know that. Just touched the 200-day. Again, why I consider this testing is this blue line seems like it's really starting to head for the red, and that's not a good thing. I don't like when transportation stocks break down. Ooh, this is an ugly one. KOL, the Coal Vectors ETF. It was living above its 50-day and acting great earlier in the year, and boy, come March, it just choom. And here we are. That's about as much of a test as you can take on the 200-day there before you start slipping below. Steel, the Vector Steel, just touched it once, but again, we're not looking pretty here. This 50-day is heading, looks like it's headed towards the 200-day to me. BWY, what's that? Korea? Yeah, South Korea. Okay. We've only hit it once here, but we hit it back in here. And this one is just, you know, it's not living below it, but it's really getting close to heading there. So that's the 10 ETFs that are what I would consider testing the 200 day. So that's not a good thing. So now we look at the ETFs that are trading below, consistently below the 200 day. These are the ones that are in big trouble. The XLE, which is the energy sector. You can see we're getting ready to do a black cross here. I mean, yeah, you can say it's at the 200 day, but it's had a lot of closes below the 200 day. So to me, this looks like, I'm going nowhere, nowheresville. XLV, that's the healthcare sector. And we have dropped low, and we're getting ready for a black cross on that one too. XLP. Oh, hey, what do you know? We have a black cross. If this was black, we'd call this black. I like blue better than black, so. But this is considered when the 50-day moving average crosses over the 200-day moving average. It's a black cross, and that's considered a very bearish signal. And you can see that the consumer staples ETF is not doing well. We're living way below the 200-day up here, and the 50-day for all that matters. And that happened back in February when we crossed so when we had that first 10% correction back in the last week of July or January and the first week of February, this thing never recovered. Okay, so that's our first black cross, XLB. Okay, again, we don't have the black cross yet, but you can see that this one has traded below the 200-day here and really had a bunch of closes below the 200-day. So, but it's heading towards a black cross real quickly here. Ooh, this one had a black cross a long time ago. This is the utility sector, and normally when you have a correction, a lot of times the big players will hide in the utility sector and it'll go up. But this thing, while it has crossed and done a little bit of trading here above its 50-day moving average, it's still way below its 200-day, and I haven't had any success with it. I just don't like the looks of that chart. XHB. Okay, this one did cross above, but we're getting ready to do a black cross here. And we have all these closes below. We had two closes above, and then we're back to below again. So not good. Another black cross, and not only that, I don't know when. This is only a 3-month chart here, but because we're swing trading, but this thing hasn't looked like it wanted to cross over, which would be a golden cross. When the 50-day crosses over the 200-day, they consider that a golden cross. That signals that we're heading back to positive territory, bullish territory. But this thing just hasn't been able to move at all. And here's one that's even uglier, UNG. The 50-day can't even see the big space between these. It started to narrow a little bit. I played UNG this year because in the winter, when you have a bad winter, normally this natural gas will, the supply, as the supply lines tighten up, it gets there, and we did have a big run up here in January, but man, ever since that, this thing has just been a total dog. So not good. IBB, good old biotechnologies, just broke down below on this correction, and ooh, ugly. And here comes the 50-day getting ready to cross over for a bearish black cross on that one too. OIH, that's oil services. There we are. There's the black cross right there. It just happened on that day right there, folks. And This is one ugly one. It's just not going anywhere. Looks a lot like XLE. Those two are related. Oil field services and the big oil producers are, they trade hand in hand. IYR. Okay, this one's trying the U.S. real estate. Again, that's a contrarian play when there's a bearish market. A lot of the big boys will hide in XLU and IYR, DIA, the Dow. But this thing is just, this black cross occurred back here, and this thing is just having trouble. It's no ways near its 200-day, and it's even having trouble with still fighting its 50-day down here. So I wouldn't be interested in taking a position in this unless it got above this 76, 75. And I don't show volume on this when I'm scanning the charts, but I would like to see this to get above that with on significant increasing volume, so that we know that the big players are going up there. EWG is our last one, and that one is pretty ugly, and we're getting ready to do a black cross on that one. That's Germany. So there you have it. We have 12 ETFs that are trading below their 200-day. We have 10 that are testing the 200-day. So that's 22 ETFs out of 35. 22 out of 35. That is not good, folks. So the market's in trouble. Technically, there's been a lot of damage, and it's gonna have to do some stuff. Now I want to just spend a minute on FinViz here. This is another look at what it does. This is the home page for this financial visualizations software, and this part's free. You can sign up. I don't know what it costs. I don't need to do it. I have Fidelity to do research on. I have all kinds of things, and I'm just a trader. I'm not interested in becoming a long-term player. But what's good about this is you see how the Dow performed this day, and at one point it was down 700. So you can just sign up for this thing, and at any time you come in. It also shows you the number of advancing and declining shares. Okay, there's 19%, 1,394 advancing shares, 5,423 declining shares. That's not good. They had 64 new highs and 98 new lows. Again, the red means it's bearish, the green means it's bullish. And then we have 29% of the stocks that they follow. In this case, it looks like it's about 6,000. So again, that's fairly bearish, really. I mean, and what did we just see? We had 22 out of 35. So 22 divided by 35, that's 63%. And this is at 70%. Well, here we're at 60%, 75%. So if we went through and scanned all these stocks, all these 6,000 stocks in here, we'd see that 70% of them are below their 50-day moving average. So there you go. Why did we do our scans? Well, we do our scans because we're trading those items. So we got to see where they're at to see if we want to take positions or if there are any setups. And then this one's important also, above and below the 200-day. Okay, the 200-day. This to me, when you're below the 200-day, you're living in bearish territory. Okay, if you're above, you're bullish. And again, here they are. They come back and they say, well, for this trading day, we were 68% bearish and 32% bullish. And then here's your heat map, which you can click on maps and you go to your heat map, which I already showed you. And I spend more time on that. I like that a lot. The other things you get here is, and it's a good trading tool, is you get the big gainers, the ticker, the percentage change, the top gainers. They tell you if it's a new high, overbought, unusual volume, earnings before, insider buying. And you just, their trend line support, trend line resistance. I mean, there's just tons of information on this thing. Another thing I like is major news. So you have the big players here, what they did. I don't know what that stock is, Longfin Corporation. You can just go right there and you can see the chart on it. I mean, just like that. So I do spend some time during the trading day looking at this website. And then this is another nice feature. You get earnings release information. That was after the close on the 6th. Now here's the ones that are going to report earnings before the close on the 9th. Monday's the 9th. So I mean before the open. So these companies are going to report, and then after the close, these companies are going to report. So that's another nice thing. And there's tons more. I could spend a lot of time on this one, but at any rate, that's it for this video on trading tools. We've done some scanning, and hopefully you learned something. This is Greg Gallagher with G3 Investors. Good trading, good luck.